Welcome to TradeTheMBI.com. This is John. This report is for the 21st, and as we start to head into the constricted holiday, beginning of the holiday schedule, you can see we really haven't done a whole lot of anything here, but we are getting bigger ranges within the day. And still, while we say it's bigger, it's pretty tiny relative to past moments where we've seen significant increase, and that's just because of look what we had. We were stuck here with the orange in between. In a relative no-go. Now we started to see a slight uptick here of steel, cyan, meaning shorts are activating a little bit, but so are short midterm buyers. We still haven't seen the red move up and break into that 7.5 zone. That would be what it would take to get a breakout from this range. At this particular point, we're sort of stuck. You also see a little bit of softening from the green here, which is the midterm. So there's an indifference taking place right now is really what we're seeing, and you're also seeing that in the shakeout. There's no trending. In fact, it's more weakness than it is positive. The fact that we're holding up so well, indicated here by the extreme. There's not a significant amount of selling that's driving anything, but you also need more buyers, and without a huge short interest, there's just nothing really moving. So while it correctly identifies a short setup here, like on the NQ, it really isn't doing a whole lot of anything. I mean, you've got a modest dip just to ABM supports that are right here, and that's been the extent of it. Clearly, the NASDAQ has performed better, but you can already see starting to make a lower shakeout reading. So same highs, lower shakeout. There are plenty of chart reasons to be a little concerned as to the sustainability, particularly now that we've been up at this 80 range on the ES. Not getting to the 2600 range, it can take a while, and oftentimes it'll take 10 days or so. We'll see when we get to the light volumes right before Thanksgiving, because that tends to be an opportunity for the light trade crowd to get in there and kind of push things around a little bit, kind of throw it askew. The euro still well above the range right here at the bottom side when we last hit it, so that's more than sufficient to keep the markets where they're at. And bonds still ridiculously high from that standpoint, and oil holding on just beautifully. Nice reset of the shakeout right there after the little short setup that developed right up here at the peak. Dip to the ABM green, and then boom, resurfaced. It's not quite overbought, but it's close. And gold, just retracing, and that's what we said too. We could see that this wasn't enough to really sustain a huge move. Particularly now, if the steel drops below the cyan, you're going to get even deeper. But long-term play for gold is still to the higher. Now, all we did was retrace this positive extreme, and still has potential for turning around. Wouldn't take much to see the tick from there. The unfortunate part is the steel wasn't reset when you got the crossover from down below, and so short-term buyers that lifted this couldn't sustain it indefinitely. And from a 5K standpoint, so the beautiful cascade lower creates a whole new series of buy setups coming down below and rallies right back to the peaks. So until we see the lows starting to rise, we won't have a pullback to the bottom yet. So at best, you'd be looking at a retrace to the 76 range, which would be a 50% reset, which that's where I would be looking for new buy configurations. If it happens earlier, great, but that's the long and short of it, the quick synopsis of everything. So, all in all, pretty good stuff, though. I mean, really enjoying the ranges, and I don't think there's a concern either way, shorting or buying this particular market at where it is right now, given the readings. I think you can take advantage of both setups. As always, though, trade well. I'm going to continue to get on the mend here and get healthy and get back to it. As always, trade well.